Welcome, dear traders. In the Asia-Pacific region, stocks rose moderately today. Stock indexes in Japan and Australia picked up the bullish momentum on Wall Street and also moved into the green territory. The New Zealand index compensated for early losses and closed the session with the green figures after 4 losing sessions. The positive sentiment among Asian investors can largely be explained by external factors. In the United States, the season of third-quarter corporate reports is again in momentum. For example, Johnson & Johnson, Bank of America, Goldman Sachs and other major U.S. companies will release their earnings reports today. However, stock market gains ahead of the quarterly reports may be limited by high U.S. government bond yields. The rise in Treasury yields has acted as a constraint of a monetary policy and has favored the U.S. regulator. As a result, recent comments from Federal Reserve officials were more dovish. The Fed may stop raising interest rates, most of the market now believes. This is especially true as many small businesses in the United States have been struggling to cope with the imposed restrictions. The evidence now suggests that the main topic on the Fed's agenda will not be the size of the next hike, but the timing of keeping rates at the current levels. The minutes of its September meeting have already highlighted policymakers' concerns about the risks of raising rates too high. President of the Federal Reserve Bank of Philadelphia, Patrick Harker, made the same point yesterday. He said that the regulator should not add new pressure to the economy by raising rates. Most likely, the Fed is preparing the stage for a long pause. As a result, markets will unlikely wait for Jerome Powell's speech later this week. Meanwhile, the dovish prospect of a prolonged pause has already put a damper on the US dollar's gains. As a result, the greenback started Tuesday's Asian session trading near 106.20. However, the US currency usually benefits as a safe haven asset in times of geopolitical conflicts. The greenback is also supported by a resilient U.S. economy. Therefore, the superiority of the U.S. economy compared to the rest of the world, combined with a relatively aggressive monetary policy, remains the main driver of the dollar's growth. As a result, the US dollar index traded higher in Asia within the range of 106.20 and 106.50. It soared to 106.30 early on Tuesday after losing some ground in the previous session. Meanwhile, the crippling Chinese economy continues to experience turbulent times. The potential default of another major Chinese developer is among the main concerns in Asia. According to JPY, the companies, which accounts for 40% of real estate sales in China, are at risk of defaulting on their debt obligations from 2021, with the defaults on dollar-denominated bonds already amounting to $114.6 billion. Country Garden is due to make a $15 million coupon payment on Tuesday. However, there have already been warnings that the company could be in trouble if it defaults. China's real estate sector, as well as the Chinese economy, may be harmed significantly. In addition, China's GDP prospects may disappoint investors. The region's currencies have been trading sideways as uncertainty looms over the markets. The dollar-yen pair is trading within a narrow range of 149.40 and 149.70 for the second session. Early on Tuesday, the pair consolidated near 149.60. The technical indicators are still on the side of dollar's bulls, even though they are taking a reversal position in anticipation of the Fed's next move. This means that the yen is at risk of breaking through the key resistance level of 150 and moving higher to the 12-month high seen in early October. Notably, the yuan was at a 33-year high at the same time a year ago. The currency is at 33-year high today. For the first time, the Bank of Japan has carried out several interventions in the forex market. By the way, Japanese Finance Minister Shinichi Suzuki said today that there was no need to specify what factors would determine the movement of the currency. In the Asian trade, the Australian dollar was trading within a wide range between support of 0.6334 and resistance at 0.6369. Over the past 24 hours, the Aussie has gained and managed to return to 0.6350. The Aussie's recovery came against the backdrop of increased risk appetite among stock buyers. In addition, following the release of the minutes of the Reserve Bank of Australia's meeting, it was revealed that the regulator had already considered the chances of an interest rate hike in October. Taking this into account, a further tightening of the Australian monetary policy is quite possible. However, much will depend on incoming economic data. The hawkish outlook is providing some support to the Australian currency against the backdrop of a possible pause by the Fed in 2 weeks. The New Zealand dollar's trading range also remained tight in early Tuesday between 0.5865 and 0.5910. The chart shows that the Kiwi fell sharply at the start of the Asian session. After the close of trading in Wellington, the currency plummeted for a second time. And this time it broke through the support level of 0.59 and approached 0.5886. Fresh reports showed that inflation in New Zealand dropped to its lowest level in 2 years, reaching 5.6%. The data reinforced the dovish stance of the country's central bank. Under this pressure, the currency moved into the bearish territory. And that's all for now, but keep in mind that the market is changing constantly. Subscribe to the InstaForex TV channel, leave your comments and questions under the video, and we will be happy to get feedback. See you online soon!